Wall Street is piling into Ethereum, and now some Solana holders are wondering if they should sell Sol and buy ETH. If you only hear the headlines, you could easily think, well, if ETH is Wall Street's pick, maybe my Solana's in trouble. Maybe it really was just meme coins and hot air. Maybe ETH really is the chosen chain. I hear you. The ETH headlines are everywhere right now. I recently watched a Bankless episode, and they were interviewing Tom Lee, a well-known Wall Street market strategist. Tom Lee is the co-founder of Fundstrat, and he's very famous for making a lot of people rich back in the day. And in the past, he's been associated with being bullish on Bitcoin. He's behind a company with a ticker BMNR, Bitmine. They're one of these ETH treasury companies. He said Ethereum is where Wall Street will financialize on-chain. And he said Ethereum was a legally compliant blockchain. But he's not telling you the whole story. And if you've been around for a few years, it's extra confusing because not that long ago, it was having a challenging time. Usage metrics showed Solana beating Ethereum in key areas. So what the heck happened? And more importantly, what happens now? Hi, welcome to Sovereign Stash. I'm Anna, ex-product manager turned full-time crypto investor and creator of the Sovereign Stash strategy. Today I'm breaking down why Wall Street is buying ETH now when they ignored it not that long ago, why that doesn't erase Sol's upside from here, and how institutions really think about ETH and Sol. So, if you're into content that focuses on strategy and not just shilling meme coins, hit like and subscribe so you don't miss my next video. If you're new to crypto and feel like you need more basics first, I have a free 5-day email course linked in the description that will get you started. Before we jump in, I want to mention that this video talks specifically about ETH and Solana, and I hold both of these assets. And as always, this is not financial advice. Always do your own research. So wasn't ETH dead? What happened? What changed? It's not that ETH mainnet suddenly fixed its problems overnight. Well, in short, what changed is that the US lawmakers and regulators have broadcast enough public on-record signals that Wall Street now feels safe buying ETH, staking it for yield and building on top of it. We're talking about the Clarity Act, the Genius Act, two things I spoke about in this video, the SEC chair's recent speech, and Project Crypto, the government's official 166-page initiative that I read so you don't have to. But basically, it's a document the government has published that signals the SEC's intent to bless crypto, basically. But let's pause on the speech from the SEC for a second. It happened a couple of weeks ago because in my view, it's one of the most important market-shifting moments of the year. It is super rare to see the head of the SEC, Paul Atkins, go on record describing exactly where they see public blockchains fit in regulated finance. This represents a huge shift from the previous regulatory environment, which was openly hostile to crypto. With a new, more pro-innovation stance coming from Washington, DC, the floodgates for Wall Street are beginning to open. Remember, this is the new SEC chair, because the old one, Gary Gensler, who was busy suing all the crypto companies, he resigned just before Trump came in. Remember, Trump said he would fire Gary Gensler if he got elected, but he didn't need to. Anyways, the things in Paul Atkins' speech have to be heard to be believed. They're so forward-thinking and pro-innovation. I really had to pinch myself reading it. And it's so unusual, I have no doubt it has significantly fueled how Wall Street is changing how it allocated capital into crypto, especially Ethereum. The takeaway here is this. This strongly pro-crypto government message now opens the door for Wall Street to do what it wanted to do all along. Stablecoins, tokenized stocks, complex financial products built on smart contracts. And especially, they get their staking yield. Bitcoin can't do those things because it's not a smart contract platform, different technology. Ethereum and other blockchains can. And now, in Wall Street's eyes, it's finally safe to make that ETH bet they really wanted 2 years ago. Remember, the regulators had already made it clear that Bitcoin was safe years ago. Ethereum still had a few question marks over it, especially if it was being staked for yield. But now, ETH and others basically have been deemed safe too, like Bitcoin. And here's where you need to get more savvy when you see headlines. Tom Lee has been saying Ethereum is a legally compliant blockchain, but he's using a storytelling technique called narrative scaffolding to influence Wall Street. ETH isn't compliant in the sense of a government certification. The protocol is still neutral code, but the compliance rails are now in place. We're talking about things like ETFs, tokenized funds like BlackRock's BUIDL, I don't know how to pronounce that, and mature custody solutions. So these things make ETH a safe bet for institutions who already made their first bet in Bitcoin as digital gold and now want a programmable settlement layer they can build financial products on. So Tom Lee has simplified a complex reality into a sticky phrase that moves money without giving you the full picture. So he's not making it clear that no public blockchain is inherently legally compliant. It's like public roads, for example. The roads themselves aren't legal or illegal. Public roads are open for anyone to use, but the cars on them need license plates, insurance, and to follow traffic laws. In finance, that compliance happens at 3 levels. The asset level, so the coin or the token itself, like SOL or ETH, or a stablecoin, or a spot ETH ETF share, for example. The issuer level, so this is the company or institution that creates and sells that asset. And the custodian level. This is the one holding it for investors, meeting security and reporting rules. So Ethereum's advantage right now is that it already has the most complete setup, or rails, for all 3 right now. So when Tom Lee brags about Ethereum being legally compliant, if you don't understand the full truth and reality, you might think ETH has some government seal of approval as a blockchain, when in reality, it's just about Wall Street building permissioned products on top of Ethereum's permissionless base. And there's nothing stopping Solana from building those same rails in the future. ETH's just earlier in that process. The more you can spot these storytelling techniques from Wall Street, the less likely you are to be swept up by potentially misleading narrative, or at least understand it's more nuanced. So anyways, if ETH's the safe bet now, does that mean Sol is finished? Absolutely not. What's happening now is phase 1 of institutional adoption of smart contract blockchains. They get the blue chip settlement asset first, that's ETH, after already securing Bitcoin as their long-term store of value. My thesis is that phase 2 may be about performance, and this is where Solana shines. High-frequency finance, on-chain order books that work at scale, global payments. For example, Visa's building pilots to settle USDC on Solana, and consumer apps and decentralized physical infrastructure networks. For these kind of applications, sub-cent fees really matter, and tokenization at scale, so minting millions of assets, not just one fund. The way I see it, if ETH is becoming Wall Street's vault, slow, secure, compliant settlement on-chain, Sol can be their trading desk. Fast, cost-efficient, built for high-volume action. Both have a place in a mature portfolio, arguably. And if you're thinking, okay, well, what about layer 2s on Ethereum? It's a fair question. Look at what's actually happening. Coinbase's Base chain, which doesn't have a token to invest in, Base is technically a layer 2 on Ethereum. But it's only got one validator, Coinbase itself. It's about as centralized as it gets. And now Robinhood is planning to build on Arbitrum, which is another layer 2 on Ethereum, which would make what they build effectively a layer 3, a customized layer 3. So these aren't truly decentralized ecosystems. They're walled gardens with blockchain plumbing. That's not inherently bad, and it's not unique to Ethereum. Solana has projects building in this institutional lane too. The difference is that right now, Ethereum's rails for those permissioned products are further along, while Solana's are earlier in development. So, If ETH is where Wall Street feels safest right now, remember they've got a lot of lawyers, what's the real play for anyone holding SOL? Well, in my opinion, I believe both can win, just in different ways and maybe on different timelines. So ETH has a head start on compliance rails, regulated products, and the narrative institutions want to hear, plus a 10-year track record of stability that makes it easy for institutions to say yes to ETH. But SOL has a technical edge for performance, low cost, and scaling to millions of assets and millions of users. It's earlier in its institutional build-out. But that doesn't mean it's doomed. I could be wrong. Markets surprise us all. But also too, remember, nothing I say is investment advice. It's just my take on the market today. But I don't see a future where SOL just dies from here. It's a different bet and it's serving different needs. So I can objectively say the developments on Ethereum are very bullish for ETH price and institutional adoption of Ethereum. But as someone who cares about why crypto exists, always remember the key gift crypto gave us retail participants. It wasn't just to get us out of poverty fast. Crypto's not just a get-rich-quick scheme, contrary to popular belief. It's a sovereignty plan. Let me explain for a second. Bitcoin was the first time we could have money whose value wasn't controlled by any single entity like a government or central bank or Federal Reserve. That technology breakthrough lets us hold digital money in our own digital wallets and become self-sovereign. And because of this, it started a new financial system, that's crypto, that wasn't gate-kept by the already wealthy Wall Street types. So, in my view, the goal now isn't just to ride the institutional wave of money coming into crypto to grow our own wealth. Yes, we are doing that. But remember, we also need to come out the other side still owning monetary assets they can't freeze or manipulate or debase. My thesis, in the long time frame, globally neutral assets will win. By globally neutral, I mean assets that no single government can freeze or censor or control. And they can't print out of thin air, right? And that people everywhere can choose to hold without asking a bank's permission. And they retain their value, their good store of value. A good question to ask of a crypto, in my opinion, is would someone in any country, even one that doesn't share your politics, would they still want to hold this asset? If the answer is yes, well, maybe you're looking at something with potentially global demand. But if it's no, meaning if it's tied to a specific jurisdiction or agenda to retain its value, that makes it fragile in the long run, in my opinion. And let me be blunt, both ETH and SOL meet my criteria for decentralized, permissionless assets I can self-custody without fear of a government freezing them, as long as I hold my own private keys, of course. And I already own both of these assets as a result. Now that the regulatory environment's changed, we may see ETH grind up in its dominance chart, like the Bitcoin chart ground up, or it's been grinding up for the last few years. And we may also see Wall Street embrace Solana or other, even newer layer ones. Institutions are very risk averse, so remember timelines can and probably will be years. So should you sell SOL for ETH because of Wall Street? Well, I'm not. SOL has very solid fundamentals. And its fundamentals haven't changed. And also too, remember, this isn't a zero-sum game. ETH and SOL can both win. It's like asking Microsoft or Apple. Well, Microsoft is focused on enterprises and Apple was focused on consumers. There's room for both, and ETH and SOL are a bit like that. What's most important is that you hold any long-term positions in either ETH or Solana in your own self-custody wallets so that you and only you have control of those assets. And as long as you understand what's behind the narratives driving both assets, you can position yourself to benefit from each without losing sight of why crypto exists in the first place. By the way, this video was based on an article I wrote recently on X. If you want to read the original article, I've linked it for you in the description. If you found this breakdown helpful, watch this next. I think you'll like it. And don't forget to like and subscribe if you haven't already. Thanks for watching. See you in the next one.